Thanks for staying with us on SABC News. Let's take a look at your market news now. Asian markets tracked US losses. Hong Kong stocks led sharp losses after the S&P 500 saw a new 2022 low overnight on Wall Street. The Chinese yuan reached its weakest levels in around 14 years. The Shanghai Composite Index was down 1.58%. The Nikkei was 1.5% lower, and the Hang Seng Index down 3.41%. When we go to the United States, Wall Street sank deeper into a bear market on Tuesday, with the S&P 500 recording its lowest levels in close to 2 years. This as the Federal Reserve policymakers showed an appetite for more interest rate hikes, even at the risk of throwing the economy into a downturn. Microsoft and Google parent Alphabet each dipped for much of the sessions. The S&P 500 lost 0.20%. The Nasdaq Composite gained 0.25%, and the Dow Jones Industrial Average fell 0.43%. As we said, the S&P there ending at a 2-year low as that bear market deepened. When we look at other markets, the JSE is also lower at around midday. The All-Share Index declined by 1.5% to 63,051. The Industrial 25 Index is 1.5% weaker. Financials have shed 1.6%. Markets in Europe are weaker at this hour. Britain's FTSE 100 has declined by 0.3%. The CAC 40 in France is 0.2% down, and Germany's DAX has lost 0.3%. The rand is weaker against major currencies, trading at 18 rand and 5 to the dollar, 19 rand 26 to the pound sterling, and 17 rand 27 to the euro. Looking at commodities, gold is trading at $1,629, platinum at $845 per ounce, while the price of Brent crude oil is at $87.06 a barrel. Right, let's get some market analysis now. Carmen Belwano is a portfolio manager at Absa Asset Management, joins me now. World stocks sinking to 2-year lows. That seems to be driven by those persistent fears of a recession and those spiraling borrowing costs. Just talk us through what that looks like in the different markets in Asia, Europe, and even here.
Yeah, so I think if we start with volatility, we saw obviously lots of news coming out last week. With the Fed coming out with their interest rates and the SAB as well moving theirs. And I think a lot of the concern has not obviously gone away. Overnight, we had a lot of the Federal Reserve officials continuing with a very hawkish sentiment, which has obviously played into, gone into the numbers overnight. If we look at the volatility index for the last week, that's up 20%. To give an indication of what's happening in the markets at the moment. And I think volatility is the one key thing that's been constant over the last few weeks and will continue. And not to be surprised by the weakness that we've seen at the moment across the globe.
Carmen, when it comes to currencies, the pound taking an up, partly in part because the Moody's and IMF criticizing their new economic plan.
Yes, absolutely. So I think one of the key concerns, as mentioned by the IMF, is around the fact that the current tax cuts are likely to exacerbate the inequality in the UK, number one. And also from, as you've mentioned, from Moody's, the concern around the fact that these tax cuts are unfunded, which will lead to negative credit quality for the UK as well. I think a lot of it has also come from the fact that we have obviously seen the strength in the dollar, which exacerbates what happens in the UK. And so that's definitely been a significant tailwind for the weakness across the UK at this point.
When it comes to that dollar strength, we're seeing some currencies like ours taking a beating. Talk us through that and the other currencies that strength is affecting.
Yeah, so definitely getting a theme related to, as I've mentioned, the concern around the Fed and the hawkishness. And as that continues and we see the analysts move their numbers in terms of what the likely November interest rate movement is going to be, as well as potentially in January, we are likely to see strength in the dollar as we see those numbers inflate. So where there would have been maybe a expectation to be a lower increase in November, I think we're now at about a 50 bips hike to 75 bips once again, if we go off the back of the most recent commentary that the key here is to get inflation down. And until that happens and we see the US inflation either tracking sideways or at least coming down, we're unlikely to see a halt in the increase in the interest rates, which that has a direct implication for currencies across the globe.
Carmen, when it comes to the kind of fear, worries or jitters that we're seeing in the market, people always say gold is a very safe space. We saw it declining, very small, 0.3% this morning. But is that the case when it comes to gold as a commodity? Is it the safe, almost untouchable commodity?
Clearly not. We have seen it come off from the highs earlier in the year. But I think that's largely driven by the strength in the dollar. So I won't reiterate what I've just said about where that strength is coming from, but it seems to be that the dollar seems to be a safer haven investment at this point than the gold price is. And hence we're seeing the tapering off of the gold price.
All right, when it comes to oil prices, Brent spot prices falling in early trade, not significantly though. Just talk us through what that picture is looking like in terms of the price of oil and also maybe how it's going to affect us.
Yeah, so you'll remember, obviously, once the Russia invaded Ukraine, we saw a significant spike in the oil price. Lots of concern around energy crisis and the price of fuel across the globe, and we've seen that come through in inflation. However, there is an expectation that OPEC Plus is likely to reduce their output or their daily output in terms of barrels during the course of this week. So that has given some weakness to the Brent crude for this week as it stands. The expectation is that it may be between 500,000 to 1 million barrels, which was the last number spoken about last week. Sorry, not last week, yesterday. And that has come through in slight weakness in Brent crude.
Then let's quickly take a look at company news. Barloworld releasing a voluntary trading update for 11 months to 31 August 2022. Operating profit up 17.6%.
Yeah, so pretty strong numbers, a beat to what consensus was looking for. I think a lot of it has come through from the Caterpillar equipment sales in South Africa, so that are up over 20% on top line, and as well as the in-grain division, which saw a 36% boost. Definitely seeing a positive in terms of both revenue and in terms of operating performance. And we saw the share price reaction up 4.4% today. I think adding on to that, we also saw a conclusion to the issues in terms of the UK pension. Yes, they did need to pump in about 2 billion rand for the shortfall there, but that has now come out of the risk. Now you've eradicated that risk factor for the group. So it looks positive. Seems to be that the expectation is that it will continue to outperform.
Carmen, looking ahead at the week, is there any market-moving news that you're going to be watching out for on the company's front or beyond?
On a macro level, which is probably the biggest focus at the moment, definitely looking for South African PPI numbers late in the week, but more importantly, the US jobless claims numbers, which will give us an indication of how much the US economy is continuing to grow, or we've seen a pullback, which will be a good read-through into inflation going forward. So that'll be the key macro factor to look up for this week.
Carmen Belwane, Portfolio Manager at Absa Asset Management, thanks so much for your time and insight this afternoon on SABC News. And that's where we leave it for our market news today. My colleague Nompumelelo Siziba standing by in just a moment to take you through the rest of your afternoon business news. It's good afternoon from me. Stay safe.